everyone, welcome to our Accounting 210. In this video, we continue with our chapter 2, building blocks of manager accounting. Last time we talked about direct cost and indirect cost. We touched a little bit of the period cost and product cost. So today we look at the details and then let's get started. Let's get started. So let's look at this table. Let's look at this table together. Make it larger. I don't know why I didn't do this. Sorry. Okay, let's look at this table. Okay. As we said, you can see this is the company, right? This is a company. We look at the cost flow from 2007 all the way to 2017 to 2018. Make sure those are two different years. So I highlighted here to tell you those are two different years. And then in 2017, we separate the cost to product cost and then to our period cost. We said product cost is just a production or purchase, right? They first initially recorded as the inventory. When you got the inventory, you first debit inventory, and then when you sell your inventory, it became your cost of goods sold. But then it's your inventory first in the balance sheet as the product cost. And then we said all the others, they recorded as the operating expense. So they just became the operating expense immediately in 2017, the income statement. Okay, so this is the income statement. Those are the operating expense. Whenever it happens, we expense them immediately. And then for the product cost, for the product, remember, they were sitting in our balance sheet as the inventory. So if we sold the inventory in 2017, the inventory will become cost of goods sold in the income statement, right? So you sell your inventory, the inventory becomes cost of goods sold. And then remember we said when you sell things, you have your revenue. So you have your revenue. So your revenue minus your cost of goods sold, we got our gross margin. We minus this operating expense, we get our operating income. So that's how we get our 2017, the operating income. But remember, some of the product or inventory, they didn't sell, they were not sold in 2017. You cannot put them to cost of goods sold. You have to wait, you carry those inventory all the way to the ending balance of 2017. And then when you sell them in 2018, then they become cost of goods sold in 2018 operating income. So for the product cost, you cannot expense them until you sell them. But for the period cost, you expense them in the same year, 2017. You don't care, you don't wait until 2018, right? So whenever it happens, you just expense them as the operating income. Okay, as I said, we go back to this many times, but I really think it building you the foundation, understand the logic of product cost, period cost, understand the logic of how do the inventory become the cost of goods sold in the income statement. Next one, for this merchandising company, and then they have the three types of the product cost. They have three types of the product cost. So we talk about merchandising companies. So we look at the first one is our merchandising companies, the cost. We separate it to product cost and then to the period cost. So product cost for merchandising also has three parts. One is the merchandising itself. Target, they bought the cereal from the manufacturing. So part is the first cost will be the price, the purchase price of that cereal. And then they also have this freight in cost. You have to pay shipping, right? You pay shipping, so that will be part of your inventory, part of your product cost. And then if you buy things from overseas, You may have to pay duties, you may have to pay customer. That will be also part of your product cost. So for merchandising company, 3 types of product cost: the cost of merchandising itself, the freight in cost, and then the duty or the tax or customers. All the other costs incurred in the company, like R&D, marketing, those things will be the period cost. So this is our merchandising company's total cost. Next one, we said, hey, why we go to merchandising first? Why there is no service company, right? You said there are 3 types. So how about service company? We didn't go to service company. Why? You tell me why. I put it here. Service company, all of the costs will be period cost. Why? Because there is no inventory, there is no production, there is no purchase of the inventory. So all of the costs in service will be period cost. Merchandising, they have product cost and period cost. Service company, all of the costs will be period cost. Next one, we talk about manufacturing, right? We talk about service. All of this is period cost. We talk about merchandising. We said, hey, part is product cost, part is the period cost. So we talk about manufacturing. Manufacturing is the last one. We stop here, and then we talk about other learning objectives later. So manufacturing cost, their product cost has this following part. The product cost has this following part. We look at their product cost. They have a direct material, right? How do you produce your car? Toyota, how to produce? I told you they need to have direct material. They need to have all these tires, all these parts. They also need to have direct labor. And then they have one thing called the manufacturing overhead. You said, what is this? This is the hard part most students struggle about. We focus on this later. And then that will give you the product cost of this car. Hey, this gives you the product cost of this car. Direct material, direct labor, and then manufacturing overhead. You definitely have to know those 3 parts: direct material, direct labor, and then manufacturing overhead. Okay, so what is each part? Direct material, I don't really want to read too much. You should know from this name, it's material that become physical part of the finished goods. So it's the material and it's directly attached to that car. Similarly, direct labor is the labor cost directly attached to that car. So it's the employee who physically convert material to the product. So it has to be direct labor. So all these assembling line workers, those costs will be direct labor cost. And then what is manufacturing overhead? What is manufacturing overhead? Those are all the manufacturing costs. Those are all the manufacturing costs, but they are not direct labor and not direct material. So you have an indirect material, you have an indirect labor, and then you have all the other indirect manufacturing costs. Okay, you said, oh my goodness, I'm so dumb, I don't know what's that. I post a video in the Blackboard. I really think that's a good video telling you how do you separate product cost and period cost, and then how do you get each part of this product cost, what is direct material, direct labor, and then manufacturing overhead. Promise me you watch that video. Promise me you watch that video. It really helps you. I think it helped me. So I think it really helps you. If you still have a question, go to My Accounting Lab. They also post a lot of good videos there. So go to My Accounting Lab. Remember, I showed you, go to My Accounting Lab, multi-library resources, and then look at the video, look at the demo there. Okay, so we look at the manufacturing company's total cost. Remember, Part is the product cost, everything related with your production, with your purchase, now we talk about manufacturing. So everything related with your product cost, you produce, you manufacture. Everything happens in the manufacturing, in the plant. It's called the product cost. For product cost, we have direct material, direct labor, and then manufacturing overhead. For manufacturing overhead, we have indirect material, we have indirect labor, and then other indirect manufacturing costs. Okay, so you can say it's really a lot of things. It's really a lot of things in this product cost, Watch that video, do some quiz with me. I bet you will feel better. And then similarly, for the period cost, it's much easier, right? Everything else, R&D, design, marketing, you know, delivery, distribution, and customer service, all of those, they will become period cost and will be expensed immediately, Hang on there, last thing, then we are done for today. Hang on there, last thing that we are done for today. We talk about, you say, oh goodness, why we still have so many costs? You just have a last two costs, one called the prime cost and one called the conversion cost. So prime cost is basically the primary cost. So what is the primary cost? You think that kind of the main parts of the product cost. We believe direct material and then direct labor, those two parts are the main cost of the product cost. So we put the sum of those two as the prime cost. Okay, so I tell you, hey, direct material is $1, direct labor is $2, manufacturing overhead is $3. What is prime cost? Prime cost is direct labor plus direct material. So that is $3. What is conversion cost? So those are the costs that convert direct material to our product. How can you convert the material to product? You need to have manufacturing overhead, right? You need to have all the utility, you know, you need to have all those, you know, heat or something. And then you also need to have a direct labor to convert. You also need to have direct labor to help you to convert. So we put manufacturing overhead and then direct labor as our conversion cost, which converts material to product. So we don't have a material here because it's the part that will be converted. We need direct labor and manufacturing overhead to convert. So the sum of these two will be our conversion cost. Okay, I stop here. I know your brain is already painful. I don't know about your brain, but I already have a headache. So I didn't talk too much. I didn't talk a lot of details of manufacturing overhead. I leave this one to the video I posted to the Blackboard. One more time, promise me you will watch that video. Manufacturing overhead will be very important. We will talk about this in chapter 3, chapter 4. Make sure you watch the video. I post to the Blackboard, to the material. So let me know if you have any question. In the next video, we will finally start doing numbers. And I see you there. Thank you.